Welcome to the Dr. Inia Desnia podcast. I have various U.S. and international accounting and tax designations, a master's in tax, and a PhD in business administration with a concentration in finance and accounting. Over the past 2 decades, I have helped several SMEs succeed. This podcast will provide strategies and resources to help startups and existing businesses thrive. Let's get started. Okay, so today I'm going to speak about expenses, right? So the goal is to make sure that you're maximizing taking all your expenses. So many people leave expenses on the table, meaning that they don't deduct everything that they're supposed to deduct. Remember, when you deduct, right? When you deduct, your taxes reduce, right? So the goal is to make sure you're maximizing your expenses. Now, how do you do that? Now, the Internal Revenue Code here, really, I'm not going to get too technical, but before you can deduct expenses, of course, the exceptions here and there, but you have to make sure that your expenses are ordinary and necessary, right? Of course, during the course of your business, right? We know that there are utilities. Some people use utilities. Of course, most businesses do that. Most businesses have telephone bills and internet, things like that are general. But I also want to speak about peculiar expenses that are really related, like directly, that are not common with other people, other businesses. And you have to be very careful because usually what happens, a lot of people will say that, oh, I'm deducting these expenses because my friend is deducting. My friend that has a business is deducting that expense. I hear that often from many small and medium-sized businesses. Now you have to be very careful, right? I'm not talking about general expenses. My goal for anybody, when I talk to anybody that is into it, that has a business, any small, medium-sized business, try your best to deduct as many expenses as possible. It has to be the right expenses, right? You're not just going to go and deduct expenses that are just because you're deducting those expenses, right? And so a common example is, okay, let me even throw this question out. My question is, can you deduct makeup expenses? Some people might say, oh yeah, maybe, no, yes, no. Well, my response is maybe, depending, right? Depends, all right? Okay, let me set an example. If you're into the business, if you're a clown, right? You have a clown business, right? Makeup definitely is an expense that you use. Picture a clown without makeup. Yes, it's not going to be a clown, of course. So that means that you can deduct makeup expenses, right? So I hear people say, so imagine somebody having a friend that has a clown, business, right? And this person maybe has a business, maybe a daycare. And the person should not say, oh, I can deduct makeup expense because my friend is deducting makeup expenses. So make sure you really deduct everything, but make sure that you're deducting the actual expenses that apply to you. All right. Look for those expenses that are peculiar to you and deduct them. To your business, deduct them, right? And remember, ordinary and necessary expenses for business A may not be ordinary and necessary expenses for business B. I already explained with the clown business, but there are so many like that. All right. So make sure you're deducting the right expense. Deduct the expenses, fantastic, but make sure you're doing that. There are so many. I could even talk about referees, right? Or nurses or in people in the medical field that stand a lot. Compression socks, right? Very necessary, right? Very ordinary and very necessary. So make sure you are deducting specifically. Of course, general expenses, of course, people don't miss that, but there are specific expenses. Maybe someone, as I said, someone that is in the medical field that has a medical business and the person goes out to work and might not remember that, these compression socks are actually deductible. All right. Or, and, specifics like that. Now, somebody might say that, what about if your uniform is not like really showing that it's a uniform? Now, usually if you have a logo on your jacket or something, that's really a uniform, because that logo actually makes it a uniform. All right. So make sure make sure you're taking everything that you're supposed to take as a deduction. And I have to stress that you have to be very careful. Many people do not look at their tax return, right? Because I'm using tax return because small businesses, they are not really exposed. They're not on the stock exchange, so they don't have the Securities and Exchange Commission looking at their financials. So all the SEC and everything, all those high standards of corporations, don't really apply to small businesses, because many small businesses are not listed on the stock exchange, so there's no guidelines, GAAP or GAS or IFRS guidelines that they have to follow. The IFRS, International Financial Reporting Standard guidelines, or GAAP is the general accepted accounting principles. You don't have to. You don't have to. You look at. Because you're not reporting to outsiders, unless, of course, when it comes to loans and things like that, that's different. So what I'm saying is that pay attention to your tax return, because that's what is the real police, really. Would I say police for your business? As I said, you don't have SEC compliance and things like that. So you look at your tax return. There's a case that I saw that let me give this example. If you're a physical personal trainer, if you're a personal trainer, right, you would know what exactly you see on a personal trainer's business return or business documents, business financials. It will generally be maybe like mileage if he goes somewhere to train his or her clients, or things like maybe ointment or something like that, or exercise bands, things like that. That's normal. Now, if this personal trainer has things like depletion, we know that depreciation, or those that don't know, depreciation means that it shows the wear and tear of something you use, of an asset you use, right? Let's say you're using a car, after 3, 4, 5 years, or well, not 3, but generally maybe 5 years, a car will not be exactly as, it will not have the same performance ability as it did when you bought it 5 years ago. So every year, we have something called depreciation, reducing the value of the car, maybe over 5 years, right? Example, if the car costs 100,000, we might say every year, like year 2, it will cost 80,000, right? Year 3, 60, year 4, 40. Just like that, it will just continue going down by 20% every year, because that's we're saying that the value of the car is depreciating. The car is not as it was when we bought it, right? Okay, now imagine someone that's a personal trainer seeing things like depletion. Depletion applies to minerals, right? Minerals, which is, remember, just like we depreciate things. I gave as an example, it could be furniture, any things like that. Just like we do that for assets, we do that for even minerals, right? People that have minerals, right? And there's something called depletion, because it goes down, depletes, right? Now, imagine depletion expense, and we're not talking about, we were talking about the personal trainers business document return, right? Well, if you see depletion on a personal trainer's return, you would say that there's something wrong with that, right? Well, I've seen a case that, I was auditing a case as I'm a subject matter expert in taxation, and there was an example like that in tax case that I had to look at, and several returns were like that. that they were just putting things on the business area of the return, right? Putting things in the business area of the return. And eventually, I mean, there was an issue, right? And many people don't know this. You have a responsibility. You have to check things. You have to, usually people don't know. They just sign documents, especially with their tax return. They sign, oh, I've viewed everything. Everything is okay. Pay attention, especially if you see that the person, if you just maybe met the person, or even if you know the person, right? People, or, and the person prepares your return. Let them explain, especially in the business area, right? Because usually W-2s are straightforward. They're straightforward documents, right? We have 1099s, 1099Rs, all those retirement, straightforward. But anything they put on your C corporation, anything you see on your C, on your Schedule C, anything, make sure, or even on any return, just step back and make sure that everything there is authentic, is correct. Now, it's different if I know usually if you have maybe a software, accounting software that you use to extract the information, more than usually, is likely that everything might usually is fine, but still check, because you want to make sure that everything is accurate. Because when you sign that document, oh yeah, everything is done, correct, is done. You have a responsibility to check what is put on your return. Don't get so excited only about the refund. I'm not saying that you cannot get a big refund, but people get so excited, but not really checking what really made me get this big refund. There are some items on my return incorrect, right? So you have to make sure that that you are checking, you're checking anything that is put on your return, right? Checking that everything that's put in that business section of the return is actually accurate. All right. Okay, so let's go to the next segment, and the next segment is about questions segment. And let's see. Okay, let's see.
My name is Behe Chris. I have 2 questions. 1, I often lose customers. What am I doing wrong? 2, how much do I need to spend on marketing? Thank you.
Okay. Often losing customer, what is the person doing wrong? I would say that for the customer is, so many people, and so many people are only interested. They're just focusing on the revenue, how much they're going to get in revenue. But I would say a few things I'll pinpoint is, number 1, how do you treat your customers? I know there's a place that you can actually go. I know some restaurants you go and eat, and you're so happy to go there to eat because of how the waiters, the servers, the person that walks you in, how they actually treat you, right? How they treat you. So how do you treat your customers if you're a service-oriented company, how do you treat your customers? Secondly, what are the quality of your products, right? People will pay for quality, right? Are you using the right quality right materials for a great quality? Is that what you're doing? Or are you just making things happen because you just want to make revenue? Now, when I say how do you treat customers, if a customer is not happy with something, you come back and say, oh, you know what? I didn't really mean it, or not like I didn't even really mean it. It's just, I would say, I'm sorry that it'll be, you can come for maybe a free gift card, or free, come next time, I'll give you maybe something, right? Or, some kind of discount, or, don't worry about paying me for that specific thing. Don't worry. We'll take care of it, because you do that just because you want your customers to always come back. So I would say that treat your customers well, then you will not lose customers. Treat them well. Treat them well, respect their time, but treat them well. Make sure your products are what? Quality products, right? Quality products, right? And another thing you could actually, look for ways to get suggestions from your find out ways that you can get, how do you maybe get this, it might be suggestion box, or a place that feedback is appreciated. And when feedback is appreciated, make sure you act on the feedback, right? Act on that feedback, right? Then also, if a customer comes either to your website or to your store and does not find what he or she is looking for, maybe you've had it, but it continues going out of stock, right? They will stop coming for that to your store because that product is not available. And so I would say, analyze your sales and say, okay, which product really sells fast, and make sure you put a reorder in on time. If this is selling fast, don't just say, okay, I want everything to be equal. No, you have to check. Many big companies do this. Corporations do this. And because they have a lot of, a lot of ways to analyze data, what happens is that you might say, oh yeah, I'm buying milk. The barcode is scanned and goes into a data analysis. There are some stores, what they do is that some things that are not always bought, like they are not the frequency of buying that item is not really is not as much as like milk, or for example, they know how to put in their pricing. They know how to reduce pricing for those goods that are just bought as needed, right? So you think that is cheap. So it's just a kind of analysis, right? Some people, some small businesses, they don't know that it's not all about everything being the same. Find out what is it that they like? What is it that they're always coming for? Maybe that other item that you might like, right? You might like, but they don't like it. If it's maybe, I'm giving you an example, a bakery. They are selling this product so well, but this other product, you're not selling it well, but you love it. Bake it for yourself. Make sure that your customers come in and see and come in and that product is available. I know that here and there, when I go to a bakery, there's one that sometimes sells donuts in the neighborhood. And I know what, she always gives you an extra donut. She gives you something extra, she always adds something, because the place is so busy. Sometimes in the morning when I'm going out to drop my younger son, I know, I see that in the morning, that place is so full. Donuts, teachers, all so fun. Now I know why. So try and put an incentive, find out what it is that you can do, right? To make sure your customers are happy, not you, not you, you're the owner of the business, right? Okay, that's an example. And then another question was about marketing. I know earlier episode, I had an expert that talked about marketing and some things that you can do to actually reduce the cost of your marketing. I know that small and medium-sized businesses, they have limited resources. So, trying to look for ways to, do marketing, right? Market your product, it's very huge. So I would say, go back, look at that, or listen to that podcast, or, we're also on YouTube. So listen to that podcast, go to the, or watch a video and, listen to the expert that she really explained that marketing aspect, what you need to do, how to go about it. All right. So it's very important for you to look at it so that, that will answer your question. All right. Okay. Let me, I think I can do one more before we get into our last segment. Let me see. I think there's one more I can just take right now before we get into our last segments. Let me see. I think did it come before? Let's see.
Hello, Dr. Amy. This is Rita. I'm into retail sales. How do I set prices for my products? Thank you.
The lady called saying that she's in, or her question is, she's into retail sales. How does she set prices for a product? Well, I would say that this is one of the hardest, or not the hardest, is a hard, difficult task for small businesses. Small businesses, they find it hard to set pricing for their product, right? Now, if you're someone that produces things like maybe you sew, make something, a product. Some people are even into making oils, things like that, making candles, right? Now, first of all, look at your competitors, people that are competing with you, right? Look at those people that are competing with you and find out what is their own pricing. That's first of all, right? Secondly, I will make sure you include, because it's easy to include the cost of the materials, like, the products that you use to, maybe example, make the candle, but also what about the time you spend on making that candle, right? Allocate time and put a price on that, right? And then, but I would say, look at the market, look at the trend and see, one thing that, especially when you're a startup, get into the market first. Don't worry about profit, 50% profit, 80% profit. Don't worry about that. Don't worry about that at this time. Just make sure that people know your product. Make a little profit, because let me tell you, if I am buying something and I like it, and then somebody adds maybe $2 later, $5 later, I don't mind, because that's a good product, right? So first of all, make sure, of course, it's within the price range of other people selling, but make sure your product is good. Make sure that you're doing a very, super job, great job. And then make sure that as you come into the market, right, you don't overprice yourself, because the most important thing is getting high turnover, right? High, sales. Well, I'm saying turnover, get a lot of sales. That's what I mean, right? So just picture it. You have 20 items, right? And you have 20 items. And you continue selling those 20 items every, like an example, 20, I'm using 20 just as an example. You continue selling those 20 items, like every maybe within 30 minutes, 20 items, right? Goods, because it's a good product and the pricing is not that outrageous. You continue doing that. Imagine doing that continuously, 20, 30 products. Now, imagine having those 20 products, and because of pricing, those 20 products will not sell. You're saying you're pricing it higher. So you said you might eventually sell, but by the time you sell the 20 items in 1 week, that person that priced it well at maybe a little bit lower is selling 20. Let me just say the person sells it. Let me make it easier. Maybe 20 items in a day. 20 items in a day and works 5 days a week, or sells 5 days a week. 20 times 5 is 100, but you're struggling with the 20 because you want to make 20 because you want to make a high margin. But guess what? At the end of the 5 days, the other person has sold 100, but you've only sold 20. So make sure you're looking at the market, looking at what the market says, and then as you're entering the market, right? As a startup, if you're a startup, check your pricing, make sure that it's not too high, it's not even too low, because low items, some people might question the quality of those items. So pricing should not be very low. I'm not saying you should sell at a loss. Please, I'm just telling you to sell at a margin that is not so high, just to make sure you get into the market. All right. Awesome. All right. So the last segment is about just a tip, or I'm clarifying one or two things. So the last segment today, I'm going to talk about tax evasion and tax avoidance. Just a few words on that. Tax evasion is illegal. You end up in, jail. Here, it's serious. And you end up in jail, and in many countries around the world, right? You end up in jail, or you pay a high fine. And so make sure you're not evading tax. Make sure you're not doing anything that is illegal. Make sure everything you're doing, putting things on your return, make sure they're legal. Make sure everything is legal. You're not here to enjoy 1 minute. Oh yeah, I'm making good money in my, when I go to this place to do my returns, I'm getting a big refund or a huge refund. And at the end of the day, you find out that it was criminal, something, and of course they said ignorance of the law is not an excuse. So that's what I mean here. And I always say I'm not an attorney, right? And so make sure you're not evading tax. But tax avoidance, what is legal? Is legal. The tax law is put in place for you to benefit from that tax law. People I hear people get mad when somebody is making money and is not paying taxes. People, get, why is that happening? But the tax code is there, right? The tax code is there. Take advantage of everything on the tax code, the treasury regulation. Take all the publications. Take advantage of everything and pay less taxes. Tax avoidance, it could be a credit that is there available for you. A tax credit that is available for you so that you will pay less taxes. So tax avoidance is not wrong. Avoiding tax, there's nothing wrong with that. Make sure you're, working with a professional that knows what he or she is doing. Sometimes, the government brings out a tax law, changes something. We know that in 2020, between 2020, I believe March 2020 to February 2020, March, about March, I believe, within a year, I would say within a year, during COVID time, right? There were 3 different laws promulgated that time. 3. And so, you have to keep yourself abreast with these changes. And if you have there's a credit there, there's a way you can reduce your taxes there. There's so many ways, right? Take advantage of those opportunities, because you know what? Tax avoidance is legal. That's why those laws, rules, regulations are there for you. So no tax avoidance, no. It's a no. Tax evasion is a no. Tax evasion is a no, but tax avoidance is a yes. All right. So hope somebody got something today. I'll see you next time. And remember, the live podcast is coming up from October 11th. It's going to start live. I will have details on my website, and the website will be given to you shortly, which is coming up with other details. All right. Okay, then. See you next time. Bye. Thanks for having me. Remember to join my live podcast on Tuesdays, 6 to 6:45 p.m. Central Standard Time. Visit my website, driniadesanya.com, for details. Till next time, bye for now.